Welcome, everyone, to the Kendall Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Well, folks, we had quite the day today. I did some research. It's interesting. I've got people on Twitter and on the channel here telling me it's all my fault they missed. They didn't buy the dip, and it was my fault because I said don't trade it. I keep trying to emphasize that don't trade is for day traders because of the order book. And even with the prices of what we saw today, well, that was spectacular. I look back and there was a couple other times this has happened. When they announced TARP in 2008, we got a 9.5% rally. Actually, it was 11.6. And then we had a couple other events. November 7th, in 2013, we had this big move as well. So these things happen, and these are black swans, right? So everything Trump raises, think about what happened over the last 24 hours. Trump raises 104% on China. Everybody's freaking out. We did open much lower last night, and we were down about 2.5% in the overnight market. And I was talking about, well, we're going to retest that low. So the low of a few days ago, it was a better part of about 10 days ago, I projected a potential low for the market to go to 48.36. In fact, let me just bring something up here so we can get some context, because this is going to be more of a. All right, so this was the chart that I had put up a while back. You can see we went straight down to this basically 200 week moving average, but these were the prices: 48.36, 47.45 was the extreme, and I had tagged it between 51.12 and 48.36. The low on Sunday night was 48.32 to be exact. And then last night we got a 48.71, and we were down just at and around about 2% when that happened. And the market started to go positive. I think I mentioned in the Substack last night, I watched just in a few minutes, we went from down 1.5% to positive. And the reason why this is happening, this volatility and these fast moves, is because the order book is completely empty. So it doesn't take a lot of size to be able to move the markets. And this is what I've been talking about from a dangerous side. And I keep using this word, and I'm doing air quotes, the traders, right? Just make sure that if you're a trader, be very careful. Because if you'd have put a short on, as a matter of fact, it was unfortunate. Somebody that was, I saw that got completely wiped out, said they put a one lot on in the E-minis and couldn't get out. They lost $25,000 in, matter of a couple of minutes. And what we saw today when that news was released, and think about, let me go back to where I was. Think about what what he did. We're raising to 104%. And one of the things that I emphasized in last night's stream is pay attention to the treasuries. Well, the treasuries came in this morning, gapped, and we're starting to spike. The dollar was under a lot of pressure. And I think Bassett basically said, we better do something with this, because if this bond market gets any further out of control, we're going to have problems. So I also suspect, and the rhetoric that we will get out of the White House and other places, other talking heads around the White House, is that so many people are wanting to do a deal, then we just take off the tariffs. Of course, they left them. I'm still trying to get the exact number, but they basically didn't take them off on China. So, but if you think about what happened, that was a big event, and everybody was short covering. This was a giant air pocket. And, questions that I've been seeing on Twitter, some of the questions that have already been asked, some of the questions already been asked. Is this the bottom? Is this the low? Well, that TARP announcement back in 2008, there was 11.6% rally. By the time we came around spring, there were new lows again. So I'm going to argue a macro argument here is that nothing changed because Trump took off or paused these tariffs. Everything that was on Monday is also today, right? Meaning that no fundamentals, nothing changed at all other than that, which is big. Don't get me wrong, especially with the aggressive nature. But we've seen this. This is getting, this guy, I am a Trump fan, but when you start switching these massive policies like this and causing disruptions and dislocations of capital in the markets, the only person that's changed their mind more than that is one of my ex-wives. I mean, it's very unstable. I don't like to see this kind of action. I don't think it brings a lot of credibility into the administration. I think they're making a lot of mistakes right here, and it's just going to create more of the uncertainty and havoc that we've already had. Because is Trump going to come back and say, "Oh, well, we decided to put him back on"? I mean, I think it was a negotiating tactic, like, "Hey, let's just go out there and scare him, and then get everybody to come to the table, and they do, then we'll back off." Maybe that's it. I don't know. I've read The Art of the Deal. That would be something you might want to consider. But it's from a governmental, the largest economy in the planet, and the leader to be doing that. I've got some questions about what was going on. I think Brexit and others were like, "Hey, this bond market's about to unravel," and it still hasn't recovered from that, because the fact that we saw this spike in equities, which is impressive to say the least, we're going to go through all the numbers here in a few minutes. In spite of all of that, there's no less uncertainty today than there was yesterday, in my opinion. And if anything, it's sort of like, what's next? The leadership needs to be pretty solid, especially when the things they're doing. I thought it was outrageous, the 104% and some of the announcements that they were doing. And I emphasized a number of times, watch the bond market. That's going to be the sign if we're losing control. And the 10-year printed 450. I'll bring it up in a few minutes. And the other thing that's been asking, a lot of folks asking, is my projection for a third quarter, fourth quarter recession or negative quarters still in? And I would say yes. I don't think anything's changed. I expected a lot of noise, a lot of aggressive action, but this, I was sitting here, fortunately didn't have a trade on, sitting here, and all of a sudden the market blows up. Like, what's going on? What's happening? And I've told you folks before, I try to stay on top of things the best I can. I contemplated coming in live, but it was absolutely crazy. I'm sure if any of you have the level 2 platform, then you could see what was going on. It's continuing right now. Let me just I just want to move something over here real quick. Yeah, so I mean, the order book looks the same as it has been looking, and I'll bring up some things we get into the crux of tonight's stream. But this is almost schizophrenic, I hate to say. I'm completely unimpressed. And there are, I did a couple of tweets today, and one of the tweets was talking about the reason why I've been telling traders to be careful, because if you get caught in one of these air pockets, there's no way out. I think it was 4.5 minutes, and it was 80 handles on the S&P, and it was a total move by the time it kept grinding its way out, because it was wave after wave of buying and it was just crazy. It was about 22 minutes, and we did, I think it was 115 handles, and that's a lot. So, yeah, I'm not even sure about the numbers right now. I might be conflating some of the numbers I had last night. And yeah, so like I said, there's a lot of things. I see a couple comments here. They left the tariffs on the autos. Not a lot changed other than everybody got caught short. That's pretty obvious. So we'll go through the technicals. I'm still trying to unpack this thing. I'm glad this was the week that I decided to come back every day. I will be again tomorrow. I told you last night I was contemplating doing a intra market day. I will say just hit the notification bell, even if it's for a day. I'm not sure what tomorrow looks like from the standpoint because of markets. I don't think if markets are still crazy swinging around, then I don't think it's appropriate what I was planning on doing because everybody's going to be asking about the markets. Was going to do a special session on portfolio management. So bear with me. I'll let you know if you're following me on X. I'm portfolio expert with no E in the expert, just portfolio and then the X, PERT, okay? So you can follow me there. I'll put it out there, whatever I'm going to do tomorrow. It's kind of uncertain just because of this high volatility. So, yeah, and so here's the deal, and we're going to break this down. I think what I went on to Chad, or maybe it was Claude. I'm actually super excited about Claude just announced they just launched their max access point, which is going to give me a lot more power. I've been blowing that thing up, and so I'm super happy. I think it's going to be really good for the community and some of the development stuff that I'm doing. So let's see if I'm just looking at a couple notes here, if there's a couple other things I wanted to unpack up front here. As I told you, what we've been doing here is probably the first half hour we've been doing just kind of chatting about different events and things that are going on. I think tonight that'll probably get cut a little short. I'm just looking at a couple of comments here. Thanks, Paul, for subbing to the newsletter. Yeah, I was kind of disappointed because I have one of these synapses in the newsletter last night. I did not emphasize the watching of the treasuries like I did in the YouTube video. The YouTube video is there, but finding that little segment that I was emphasizing that is, I think a lot of folks might have missed that. And I'm kind of disappointed that I didn't get that in there. Yeah, so I think what we need to watch for is this. I think we're going to see continued volatility. I've been talking about this order book, and I'll show you some things as we go through tonight. One of the things I'm interested in finding out is to see if the short-term database is actually recovered any. I'm just going to take a quick glance while we're all hanging out here and just see if the database is done running yet. So looks like that's done. Bear with me just 1 second here. And this is, I'm just verifying that, no, I don't think it's quite done yet. So I'll just, we need a few more minutes. I think the portfolio's just finished updating. Yeah, so there's a few more minutes I need. So I think probably the biggest thing, the biggest takeaway for me today was this was a complete short covering rally. I've been talking about this structure of markets for multiple days, and what I mean by structure, you need you need a lot of buyers and sellers and people to kind of set up these patterns. What we did not have today was price discovery. There was no price discovery. It was just a stampede in. Everybody was on the wrong side of the market. It wasn't like, I'm sure there was some buy the dippers, but most of that rally was just everybody that was short this thing. You know, I think it was just a total short covering rally. Does that mean that the action that we got yesterday is invalidated because of that? No, not at all. But what it does need is more structure and probably need to test. And over the next day or so, hopefully maybe later tonight in my research, I'll be able to figure out where there's some data points where we need to watch how the markets act around there. Right now, it's just, you know, complete open-ended. So let's do this. I will go through some of the index stuff here first, and I've got some charts up. So let's go ahead and start there, and then I'll circle back to the. Thank you for the $20. I appreciate that. Thank you. That's very kind. So let's do this. Let's come over here, and this is the daily chart, which is absolutely crazy. If you recall last night, there was a couple things that was my general belief of what was likely to happen. I'm just getting my tools up here, one sec. Yeah, so what we're looking at here is, this is what I was talking about last night. This is the 10-period moving average was projected down like this, if you recall last night. And this big move up, all of a sudden, everything went flatlined over here. But this was basically kind of, there was a wedge that was forming at that around this level. And I thought, okay, we're going to stay within that wedge. There was a downward slope 10. All that stuff changed today. And, you know, we're looking at, you know, prices that I didn't think we could see in one day. Nobody, if somebody told you, somebody was trolling me, I think, on YouTube, so much for calling out Tom Lee, because now he's right somehow, because, you know, all we've done is we've retraced 10% in one day, but we're still under a lot of water. I'm going to bring up this. You know, Tom Lee has been. I'm going to bring up a weekly chart here. So, all we did was move back a couple weeks ago. We've rebounded right back in here. This 10-week moving average is probably going to be a better gauge, although I'm going to show you a couple things on volatility here that's going to go on, and you know, just kind of put us all in perspective. But we're right at the market grid for the weekly, and then I think we're going to end up just backfilling in here, but we could spike up. These kind of markets, I'm trying to come up with the right words here, are very uncertain from the standpoint, when you get to this level of volatility, anything can happen. I'll show you the NASDAQ in a few minutes. The NASDAQ went all the way through the 10 and all the way to the 21-day moving average. So this is a weekly, so let's back up, and this is what I'm going to try to focus on. If you've been around the channel a little bit, I want to focus on just on the graphics here. You can see that this orange line is the market grid, and when you see what I call a volatility explosion, if you've used Bollinger Bands, you see this kind of stuff. These are similar in that it's looking at range bound, looking at ranges and not doing standard deviations, but doing Fibonacci calculations. And when you get this type of a bar in the middle, this disrupts the pattern completely. So, you know, if it's a major event and all of a sudden tomorrow they're going, hey, everything's fine. We got Japan just got in. Supposedly they're on their way. Korea, we just signed this deal, did this deal, and then all of a sudden, everybody's got to eat crow that's been trolling Trump and go, he was right. He put all this stuff together, and but what we're looking at from a technical standpoint, I think is really important to understand here, is So thanks, Andy. So Canada announced that they want a new deal. Of course, everybody's going to come to the table. And, it's sort of like, you brought a minigun in and said the 104. Trump basically did the crazy man thing that I talked about yesterday. Don't mess with the guy who's got nothing to lose. And he's just like, hey, I'll do whatever I have to make these deals and make this stuff work. But let's go to just technicals. And so this is what typically, and I know if you've been with me, like on a Fed day, an intraday, we look at maybe a 5-minute chart, even an hourly chart. And when this volatility blows up this big, I'm just going to draw in some things for context, and then I'll make this point. So I'm going to do fat lines, but you can see up on the up corner, these ranges, for the most part, are very symmetrical, and you get a little bit of a bubble here. And what happens, and this is the theory behind it. Now, I've been using these things since 1991, so I'm used to seeing these patterns start to unfold. So let me just clear out everything here. And let's get to the orange line. So you see this big spike up here, and then you see it spike here. This is what will happen, and you'll be able to see this in the next few days. This is an extreme. We're not going to get up that high. That would be back above the 200-day. But what you'll start to see is these grid lines will start to collapse, and they usually come into some kind of funnel. And meanwhile, you got markets swinging inside here of this range, maybe even spiking up, hitting both ends of the range, depending on how crazy the volatility is. And what I'm looking at, this is probably the next 10 days, 10 trading days. And ultimately, let me kill this. Ultimately, what happens is once this is a daily volatility range that's being calculated, and then the dots in between, they're kind of small here. The dots in between will give you the expectation where the high lows are going to be. And last night we hit, I believe it was S1, and we blew through the extreme, right, because of the big move. But the bottom line is that this will consolidate here, and then in the next 10 days, we're going to have probably some crazy, wild volatility trading. Next 10 days, we'll figure out which way this is going to go. So we'll figure out if it's this way or it's this way. And I think we're still going to be, you can see all of a sudden, just with that big one day, all the algorithms have adjusted to basically neutral, where I drew the flat arrow through here. So we'll probably be doing stuff on either side of this line. That's going to be a pivot line. And so we're just going to, I think we get into even more chaotic trading than what we've already seen. I don't think it settles down. It's going to take multiple days. And just last night, I was talking about the half pipe illustration, where you get momentum, and you've got a half pipe, you put a ball up here, it rolls over almost to the far side, and then it keeps going back until it rolls along the bottom, and then you set it up again and you reset it, and it bleeds off. So what we got yesterday was this big shift in momentum, and now what we're seeing is that bleed off, and it's going to stay high for several days, 3 days. Tomorrow we've got CPI coming out tomorrow. we've got claims, we got other stuff that's going to come out, and it's going to be very, very noisy. So I think with the order book, I'm going to show you the order book next before we move on, but we'll talk about some of these events. So let me just clean all this up here. All right, so I'm going to go ahead and again kind of blow up this order book a little bit so you can see it. But this is the size. Like a 20 lot is a big number right now. I agree with you, Andy. But so you can see the order book's very thin. I mean, we're actually saying here's a 50 in here on the bid side. So one of these days I'm going to do a video just on how to read the order book. But we're seeing that this is encouraging, actually, from that we're seeing some 80s and 60s in here, especially in an overnight session. Tomorrow will tell us a lot more. And it's interesting that the size is on the bid. Okay, so that's the other thing that's happening here. So is this stability? I don't know. We're not really seeing the markets do a lot from that standpoint. So, okay. Yeah, so you can kind of see that from that standpoint. All right, let's go ahead. Let's just see if we're going to go over to WaveTech here, and we're going to see if we've gotten the research running here yet. Yeah, it's still showing. Maybe this is right. I thought we were at 1039 last night. I'm just looking. Let me double check right here when the portfolios, if you're a WaveTech user, you look for here, run through 09, so that's completed. And there still could be an update. That's why I was trying to kill some time there to try to get things so they were completed. Oh, okay. Nope. One more time. 10.39. Let's look at the all stats, which will give us the buy-sell ratios. Yeah, okay. This is different. So we got 135. Let's see here. 300, 400 new buy signals. So we went up just a little bit to 10.39%. And we're looking at about 200 sells. So a little positive rotation here. Not a lot. And so a couple questions. I'm still working on some Twitter questions that are in my mind. Is one of them, is this the turnaround of the database? It's maybe, but it's still going to take at least another 5 or 10 days. And that's the point of looking at the volatility as well on the other chart we were just looking at. You know, it's going to take, when you get this kind of blow up, it's just like when I was talking about yesterday, when you get this straight vertical line down, it's going to take weeks. And this is part of the ugly process. Like I said, you might like a Jimmy Dean sausage. You don't want to watch it be made, and you're seeing the sausage being made. It's going to be pretty ugly from that standpoint. But noise, I still think, you know, people are criticizing me. I know the guy that got hit for his money. It's sad. I mentioned in a tweet that on big days like today, especially CBOT days, there's a big elevator that comes down. I think it's 3 floors. It might be 4 floors. Big, long escalator that comes down. And all you got to do is stand at the bottom. If you meet a buddy at the bottom, you're talking. You can look every day, but on big days, you can look and see who got blown up, who had a good day. You know, guys arranging, hey, let's meet over at the Sign of the Trader, which is a bar, or, you know, or the guy that's looking down at his feet. You know what happened that day. Days like today blow out a lot of money. I hate days like today. If you get them right and you make money, the old slogan we used to have is I'd rather be lucky than smart. You got lucky if you got this one today. Good for you. That's a great thing if you get one of these, no doubt. I was very active in the flash crash back in 2010 and did quite well that day. So you get lucky, that's okay. You got it. You got the right direction. You got things going. If you were looking to buy earlier today, then you blew it up. That's really good. That's funny. Yesterday, Todd, that is kind of irony funny. He watched rollover last night, then today happened. Yeah. It was really crazy. So let's try to get recentered here. Where we at here? Halfway through. Let's go through the NASDAQ. Let's see if I can come up with some ranges. I think the fact that what we're looking at here on these just the moving averages. Let me bring up the indicators. All of a sudden, this is a completely different look than what we had yesterday. Yesterday looked like multiple days trading down in a channel. All of a sudden, you get blown up and you get out of the channel. We close above the 10. The 10 is flattening out. It's only down 0.10. Let me see if I can get a rough number here. It was 1.4 down, a whole integer 1.4 to 0.26. So it's still down. So there's going to be a draw for the markets to come back under the 10 period moving average. Yeah. Let's take a look at the market grid here. So range, I did not run the sheets. It's been a crazy day for everybody. Let's run the sheet in the background, okay? Hopefully, I'm just going to grab all this data. Those of you who've been around the channel, so I'm just going to capture that. I'm going to come up over here, and I'm going to. I think this is the right file update. What I want to do is see what the probability charts are looking like. Let me just make sure it starts, and we'll go back to the charts. Okay, awesome. So it should run in the background, so we'll get some probabilities out of here. But this is, like I said, the profile of what we looked at last night on the channel compared to today is completely different. And it does suggest that we're going to see some stability. We're going to flatten out here, but we're still going to have some really big ranges. And I'm just kind of curious. On that sheet I'm running right now, I've got probabilities of where the high lows are going to be, so we'll take a look at that. Just look at a couple of comments here real quick. Yeah, I spent, okay, I have to address this, why this stuff is running. So somebody said never a good idea to be out of the market. I can tell you there's plenty of good ideas to be out of the market. So this right here is the green line is our strategy. The blue line is the S&P going back to 2003. I'm getting one of my studio lights are flashing on me. But so this was, hang on, I'm going to have to fix this. Okay, sorry about that flashing light. Anyway, this is what having a strategy and does for you. So S&P up from 2003, 480%. We're up 1,000%. Getting in and out of the market. So, touche. That's for a bunch of people that don't think you can do this. I've been doing this. I've been a quant since the mid 80s. Ask Jim Simons if that's true. Okay, so that's typical rhetoric that the mutual fund companies don't want you to ever get out of the market because they can't make fees when you get out of the market. So I'll leave it at that. This is actual trading that's going on. This is available on our system in Portfolio Expert. So, and right now it's out. Look at that. It's flatlined and the market's going down. So, yeah. Anyway, just had to bring that up. That was a good comment. Appreciate you saying that. Yeah, Jeff, that's crazy. I was noticing that the TQs were up 35%. Otherwise, the triple Qs were up 35%. That's just absolutely nuts. And I feel blessed not to have got caught in that thing. Okay. Okay. So do we want to do this? There's a question here. I think it's a valid question, and I would like to address it. Somebody's asking, what makes the price move? Trading volume was almost 4 times, but why you said the orders in the order book? Can you explain? I think I need to do that. Okay, everybody good with that? Give me a thumbs up. So let's go back. So when you get the big, there was lots of volume, and I put that out today. So let me come up. Let's segue into this real quick here, because this is a very valid question. So what makes prices move? So is it volume? One-sided volume makes markets move. There's no doubt. And in this case, in my opinion, it was mostly short covering. A lot of people were short, so there was buy volume, and they were very aggressive. So sometimes you could have lots of volume and prices don't go anywhere. Other times you have lots of volume, prices go somewhere, but it's always this aggressive side volume. So let me explain. This is my old trading floor explanation. So if I have, let's say I have 1 million shares to buy, and we're just going to make it old school days, and this stock is trading 45.5, and there's another guy in the trading pits going, hey, I got 1 million for sale at 5/8. So half bid, 5/8, million on both sides. One of us is going to have to go. I'm even going to go up to the 8th, or he's going to come down to me. But let's just say we're feeling good, and I go up to the 8th, and I buy 1 million shares at 5/8. The price moved 1/8 of a percent, 1/8, right? Another scenario, I've got 1 million shares, and nobody's really showing their size. The other guy's got 1 million to sell. Same scenario, only different circumstances. Is I'm half bid for 200. He goes 200 at 5/8, 200 at 5/8. I go, buy your 5/8, bid 5/8. I go, buy them at 5/8. So now he goes 3/4 offered for 200. Buy your 3/4, bid 3/4. He goes to even money. He goes to the even price. I go then I go 500 bid at $1. He backs off to 1/4. In 3 or 4 trades, we still traded the same 1 million shares, but prices went from half to the next handle up in 1/8. Okay, because I was being aggressive, and you see this in the order book all the time. You just see you've got these orders. All of a sudden, you see a big buyer come in. He'll just take off all of the offers, and then he's bid at that last price. And I've been involved in some penny stocks and even trading against the algorithms. I can tell you, I have a good friend who watches this stuff, but one day we were we were trading a stock that we both had interest in, and I bid this little penny stock from, I think it was a buck to 210 by doing this routine that I just told you about. There was not any volume, but I just kept, every time somebody offered, I'd buy them and raise a bid, right? And I bid this thing. I doubled the price of the stock. And then, of course, I was the bag man because I'm the only guy. So I had to find other people. We ended up selling out of this thing. But the process of what I'm telling you is what moves its price. It's the aggressiveness of the buyer or the seller, inverse on the other side of this, is exactly where that's what causes prices to move. Sometimes there's a lot of volume, sometimes a little volume, but it's always an aggressor. And today it was clear who the aggressors were. It was the buy side, and they trade there's a lot of volume. And it depends whether you're looking at the volume on an index trading or what you're looking at. If you look at total, New York Stock Exchange volume, whatever, those numbers there's a lot of other things going on. This is going on thousands of times through the stocks. But this is what always moves prices on an individual one-on-one level. And then and I mentioned this somewhat in a tweet I did today, now we have electronic trading. I mean, it used to take, back in the old days, when I started a business in 1979, it'd take you 20 minutes to get a market order in if you were going to New York Stock Exchange, especially if you were out in a suburban office somewhere or in some city office in California where I was, and then trying to get an order in a New York Stock Exchange, and you have to, I won't go through the whole procedure, but by the time it got to the floor and someone on the floor grabbed the ticket, took it to the pit, brought it back and did all that, it might be 20 or 30 minutes, and it was a market order just to get a fill. Now with the digital world, we can move obviously in nanoseconds, and that's what you were seeing today. I mean, everybody was stampeding, and that's the case. So I appreciate, hopefully that helps you out with that understanding price movement. And one of the things I said earlier when we started this stream is we did not have any price discovery today. We just had get me the hell out market orders. Like get me out or get me in. Somebody's like, oh, this thing's moving. And there's some of those guys, but most everybody, the bulk of those orders, because of the aggressiveness of the buyers, was definitely short selling. And finally, and this is the other thing. I wonder if I can get this to show you. Yeah, bear with me, and I'll bring this chart up. Because this might as well do the whole, yeah, this is perfect. This is perfect, okay? Let me come up here. So this chart here, this was the explosion. This is a 5-minute chart of the S&P, and we got 15 minutes, 3 bars. The low on this bar was 50.25 to 53.88. So 330 points, right? And then I want you to see what happened afterwards. Those shorts are still trying to get out. They bid it quickly, and any sellers that tried to come in, I did a little scalp trade in this little range here earlier, but this is still the shorts trying to get out. These are not new buyers thinking the world's gotten better all of a sudden. As we started in talking about this scenario earlier in the stream, is this thing's not over. But there's so many people short. This is what it looks like when it rolls over and goes flat, like what you're seeing on the screen here. There's still folks, get me out. And every time there's a seller, there's a buyer. And it's not because they're excited about what Trump said or didn't do or all that stuff. That comes in after you have to work off all of this stuff. And this is when I guess we ended up doing a little educational thing tonight. But this is where when I talk about market structure and that, this is building that structure. This is probably going to be, there will be a retracement of this rally once we get rid of all the shorts. They're still out there. to me, this is the classic. I got caught and I'm just trying to get out. And you wait and you hope, like this little dip right here. If you can see my cursor, that little dip is like, okay, it's going to go down. I'm going to get out. And then it turns around, so everybody stampedes back in, pushes it, and look how tight the range is right now. When I see this kind of, when the volatility collapses on a 5-minute chart like this, it's like nobody, we're just trying to, shake hands and go, hey, buddy, how's it going? Let me out. I'll let you out. Everybody's just trading right now. And that kind of, normally we have nice flow. Let me just bring this up. We kind of got, this was overnight. This is middle of the night. So I'm just trying to find, the scale's so blown up. But normally you have ebbs and flows, and there's a little trending kind of view when you're looking at the data. When you get into, this is actually interesting. If you look what the algos are suggesting, this is a 5-minute chart. They're showing a potential decline down to 53.75. That's what they're forecasting right now. Let me bring it up. So you can see everything's bleeding off. This was the big set, and then this is the momentum bleeding off. And I was talking about this the other day, and we'll move on, look at the NASDAQ and get through these other charts. Only got 10 minutes to go. But that was a really good question. I hope you guys appreciate going through that. Trump's not going to get caught for insider trading. These guys are digging deep. He's not trading. Okay, so, and if he is, that's the stupidest thing that anyone's ever done. Yeah, shift was short. Okay, so anyway, folks, that just kind of triggered me, to go into a little educational thing. I hope you understand that what moves prices in closing here is that aggressiveness of one side or the other of the balance sheet. And normally we have little ebbs and flows there in the day. There's a bias. The market's going to be up that day. Let me just look. And, oh boy. I was hoping this sheet updated. I thought I put the right data in. All right, I'm going to see if it's on my other screen, folks. 1 second here. Yeah, every time, here we go. Yeah, unfortunately, I'm not going to be able to get that. I was hoping to have that sheet run, and it doesn't look like we've got it here. This is not the right sheet. I put the S&P in. Let me just say, all right, hang on. Let's see. It looks like it's going to have to run this. It didn't update the artifact. So, all right, let's do NASDAQ. Let's go through some quick things. NASDAQ, this is a 5-minute chart. You can see it's still forecasting. We still have a bit of a rally setting up here. So, but same configuration that I was talking to you about just a few minutes ago. All right. Let's go to the daily. Yeah, so this volatility spike, this has really made this pretty difficult. The red dots, I'm just trying to get some focus here. The red dots are suggesting we're going to stay right along the 21. As I mentioned earlier, we went all the way through the 10 and to the 21, and that now we're forecasting completely flatline markets, probably potentially trading back up towards the 19,200, which put us back around the 200-day moving average. So everything switches in one day from the standpoint. We still need to get that contraction of volatility I was talking about. All that's going to happen. Let's go to the treasuries, because I think that's fairly interesting. We got a big gap up in the treasuries. Like I said, we got up to I thought we hit 451 at one stage. But the treasuries, and I was talking about this just yesterday, possibly the day before, since I'm doing daily videos again. But we're looking at the treasuries just coming back into the range. I was talking about four and a quarter, 395. Well, we printed 450. And this is what I was telling you about last night, is you have to watch what happens still. I don't care what Trump said, don't care about any of that stuff, don't care about tariffs. Watch how these treasuries trade. If they don't come back into four and a quarter, fill this gap, if they just stay up here at 435, 450 in that range, that's not a good thing. Okay. And the algos are suggesting that's what's going to happen. We're going to stay elevated here. We're going to do a quick Dower look. I'm just trying to get through some things that bring in some perspective. Dower does have some downward projections. I was talking about this down at 100. That's still a thing. I'm going to flip over to a weekly chart here on the Dower, and the weekly chart is just telling us that we're probably going to stay right around this 200 period, 200-week moving average, 106 one side or another of 106, 103, right in that range. So it looks like Dower's trying to stabilize. The algos are still a little bit of downward pressure. I don't think they get much below maybe 98. As low as 95 would be a big move in here. But it does look like stability has come back in all of a sudden. Yeah. Yeah, Paul, I just want to, you're saying I lost a lot of money in 2018 trading these 3X Drexel. These things are really scary. If you get them right, man, they're awesome. Like I said, the TQs were up 30, I think 35%. It was an insane move, So it's three times the almost 15, right? So anyway, but this Dower index is there. Let's do Bitcoin, and then I'll come back up, do some final comments. And then if you do not get my Substack letter, get it. It's kindlereport.substack.com. It's $8 a month. Pay for a year, you get it for $6.50 a month. And there's a 7-day free trial, so you can get it. I've been having some leakage. I've got like almost 3,000 people reading it and then is paying for it. So I think I fixed that last night. So make sure you at least give it a trial and all that stuff. Yeah, I will go. There's a couple questions here at the bottom. I'll cover those here in a second. But Bitcoin rallied back. This is a weekly chart. Came right back in. This is interesting because I've been talking about this 40-week moving average, 200-day moving average. So this is this green line that's going through here. Let me just bring this up. You can see this upward slope. And I was just talking about this last night. We have a couple resistance line. The 10-week moving average, which right now is, let me get some values for you, 87,550. The 40 is 79,958. So we're probably going to get sandwiched there. If we can get above the 10, then you go up to the 21 value, which is a 86.2. Let's just drop this down to a daily viewpoint real quick here. So we got, this is interesting from this standpoint, is we got an outside reversal bar on the Bitcoin. We did also close above the RTX level, which tells us we should get 1 to 2 days sideways. If you look at the red dot indicator here, this is forecasting the close or the flow here. It looks like it wants to get back below that 10-day moving average. And that 40 is a little bit different than the 200. The 200 right now is at 87. I just said the 40 is, I got to go back and forth. Bear with me. That 40 right now is at 79. So, yeah, we're just kind of sandwiched into this resistance zone. All right, that bell was the 6 o'clock local time bell on the West Coast. So let me just address this. Somebody had a couple questions. Yeah, Green Garden, I was talking about that. I will put out a tweet tomorrow on the WaveTech tutorial video originally planned. I'm going to attempt to do that. If the markets are too distracting, if I come up live, people are going to just be constantly, what do you think of this? What do you think of that? I really want to be able to get that done. Hopefully I will get that done. The plan is to attempt to do that. Okay, so let me look here. I just want to find, said you can have lots of volume between bid and ask accumulating and compressing. And then you lift the offer and pull bids. How do you get a parabolic move? More than one person doing the same thing. That's what we saw today. So the way you get like a parabolic move like this, that there were thousands of traders going after any bid that was out there. That's why there was a lot of volume, but they were just taking the offers down like crazy. And so you get, the way that the parabolic moves work is that you just got the stampede. I always call it the stampede. You get that we have such a different dynamic than I grew up with in the old trading pits. You knew how many there were. I've been in trading pits that were 30 guys. I've been in with them that are 250, 300. And even in those big trading pits, you had basically kind of wedges, things carved out into pits. Certain people were trading back months, some were trading front months. And, so there was a bunch of activity in that one pit. It wasn't all one contract. They were trading multiple month contracts, almost like if you sliced up a pie. So now in the digital world, we don't have that. We have this unlimited bubble that can grow inside of a trading module where everybody's going in and hitting that exchange and what's hitting whatever offer or bid that's in there. That's why we see these big parabolic heavy duty moves. Just want to make sure I answered the questions here. Yeah, I think Todd Stocks. I think you're right about that. Is the Japans and all the people that are coming to the table, they're rewarding them, and I think there's going to be so much noise around these tariffs. It's not over, there could be one statement, and all of a sudden we're printing the lows again. I think we're going to see some crazy volatility. Let me just look in the final comments here. Yeah, so anyway, yeah, we ended up doing some education. If you're just kind of tuned in, go back and check out the probably about 15, 20 minutes before the end, and then just go back, because just talking about trading volume, how the metrics and how things work. I think that's important. And yeah, so Japan up over 8%, Asia markets track. Yeah, I think that's what's happening. I think Todd had it right. Is they're rewarding. And matter of fact, it goes to a statement I made. I think it was in my Substack, but I may have actually made it on everything starting to blend together for me since I've been so active this week. But it could have been on the YouTube channel. But Eric Trump said, those who come to the party early will be rewarded. He goes, I wouldn't want to be the last guy to come in for negotiations. He goes, I've been watching this my whole life. And I think that's exactly what we're seeing. If you haven't read The Art of the Deal, you should, because you understand our president right now and these negotiating. But he basically put on full pressure to it's sort of like a boxer when you got somebody hurt and you got them on the ropes, you just light them up, right? That's the time. Just don't let them get off the ropes. So with China, I don't know what's going to happen there, folks. But listen, I appreciate again. We've been getting great views, great likes. Make sure you like and subscribe to the channel. I'm picking up a lot of new subscribers. I appreciate everybody watching. Trying to make these things as interesting as possible. Tonight we got a little education, but I get somebody screaming at me, just please on Tesla. I think Tesla was up what? Tesla up like 22%. All right, I'm gonna put this up. You got me in. So let me go off the screen. So this was the move. Tesla did nothing more on a weekly, but stay within its weekly grid. Was at the low. Look at this. This 200 is sitting right in here. So we had a couple days under it. Algos are suggesting short term that will probably stay up over this 200. There's still a lot of downward pressure that's out there. Don't really see anything significant, but this absolute ceiling on this stock, and this would be a big move right now, but it would probably be around 270, 265, 270 on that. All right, got a little glimpse there. Appreciate it. Green Garden, I'll just watch the Twitter. I'll let you know tomorrow. I would like to do that, and if it is going to happen, it'll probably be about maybe 3 o'clock, the final hour, somewhere around there. And then I'll come up. I'll do 2 videos tomorrow if that happens, but I'll put it out on Twitter. I'm just looking at final comments. Yeah, I don't know, Crazy Eddie. I don't know. I don't think he's trying to do anything for his buddies. I think what's happening here is that that they're truly trying to change the structure of trade, and guys that have billions and billions of dollars don't need billions and billions of dollars more. I mean, all these guys that are working around the administration, they're not getting paid. So, and they're not trying to make any money on this thing. I really, truly believe that things have been pretty screwed up for a long time, and maybe we can get some normalcy. I don't know. We'll see what happens. But, good luck to everybody. I appreciate it. And I will, we'll see you tomorrow, same time. See you then. Have a great evening. Yeah, Shark, good job, man.